Hello and welcome to your Washington, D.C. area real estate market report for July of 2025. I'm Edward Slavis with the Slavis Group of LPT Realty, and let us begin as always with interest rates. The 30-year fixed rate is currently around 6.7%. It has oscillated between 6.7 and 7% basically since the beginning of the year, so no major changes. The Fed is having a major meeting this Wednesday. A lot of speculation about what they will do. There's a lot of political pressure on them to drop rates, but also inflation rates are looking fairly strong. So many analysts are predicting cuts, but the confidence level is low because there is so much uncertainty in the market. So we will wait with bated breath until Wednesday for their announcement to see what will become of these rates. These higher rates were now over 3 years of rates above 6%. That really is putting downward pressure on the market, which I'll talk about the rest of this review. This first chart are new listings in the Washington, D.C. metro area. You can see they've been fairly constant the last 3 years, but down substantially from the peaks in 2021 and 2022. Rates started increasing in March of 22. So fewer homes are being listed as the market has softened a little bit. And this chart here represents the new listings year over year. So everything above that double black line means that it was higher than that month the previous year. The last year, you can see on the right side of this chart, basically 2020, the second half of 24 and the first half of 25, basically equal to what they were a year ago. So the market is really flat on new listings. We were hoping to see an increase in listings and more volume, but we're not seeing it. This is the median sale price. We've now broken it out between red for detached homes, blue for all home types, and that yellow line for condos. And the median sale home prices for those homes that successfully sell are all still increasing. And if you look at the year-over-year changes for the median sale price, again, everything above that double black line means it sold at a higher median price than it did the previous year. So comparing, say, June of 25 to June of 24, June of 25 numbers were higher. And with only a few exceptions, month after month, year after year, the median sale price keeps increasing. Price per square foot looks similar. These are the median price per square foot, broken down from all home types, detached and condos. And then the year-over-year change, again, most of the data points are actually showing to higher values. The caveat is that this is just for the homes that successfully sell. This is just for the homes that successfully sell. Closed sales are down. They're the peak in 2021, down 2022, and now relatively flat. And you can see the exact same thing here for year over year. The last year, basically what it was the previous year. So the number of homes selling is lower and has flattened out. Months of supply is a measurement of supply and demand. You may go and see that there are 10,000 homes listed. It's meaningless unless you know how many buyers there are and how fast those buyers are buying through or absorbing the inventory. If you hear the term absorption rate, that's what that means. So this is the months of supply, and it was as low in March of 2022 as less than 1 month. A month of supply is simply if there are 10 homes on the market and 5 sell per month, you have 2 months of supply. The lower that number, the better it is for sellers. The higher the number, the better it is for buyers. With this chart, it's a question of what we are comparing it to. So it was, in March of 2022, about a half month of supply, which is a red hot seller's market. You basically can't get any hotter. Everything is selling on average in 2 weeks. From there, it slowly climbs up, and we're now at above, roughly 2.5 to 3.5 for condos months of supply. This is a big shift. However, looking at this chart for the months of supply, it's slow. There are some major shifts here. So it's about 50% higher the previous year. And you have to look at this y-axis here to really get an idea of the magnitude change of the percentage of months of supply. Okay. Closed sales are also down, but relatively flat. The conclusion is the market is just slower. So prices are up, but everything else is slowing down. This is the new listings broken down by month, comparing January of 2021 through June of 21 to January through June of 2025. In the first 6 months of 2021, there were 51,922, so 52,000 new listings, whereas the first 6 months of this year, there were only 31,000. So a 40% decrease in new listings. For closed sales, same thing. There were roughly 40,000 closed sales in 2021, the first 6 months. First 6 months of 25 were about 23,616. So again, a 40% decrease in the number of closed sales. If you look at the list to sold ratio, so the comparison of the number of homes listed versus those that sold, 4 years ago, about 76% of the homes listed sold. This year, about 76%. So not a major change, a 0.4% change. The difference is, obviously, there were 40% fewer homes being listed. A lot of sellers are choosing not to sell. They are staying in the home, or they're renting it out, or they're continuing to rent it out. They are not coming to the market because they're worried about the buyer pool softening. So what does this all mean? Are new homes being listed? More homes? No, it's flat. Are the sales increasing? If you're talking about the price, technically yes. The number of homes selling, successfully selling, again, is flat. For sellers, what this means is if your home is properly prepared, priced, and marketed, it will still sell for the price you want. We are still seeing record homes for prices. But whether or not it's a buyer's or seller's market also depends upon your neighborhood and your home type. So all of the charts I showed were for the DC market as a whole. What really matters is your micro market. Even in my neighborhood, if you cross one block to the east and go to the next neighborhood over, the sales dynamics, even for row homes, comparing row homes to row homes, the sales dynamics are very, very different based upon the exact neighborhood. So a lot of it depends. If you are curious as to what your home would sell for, you're curious as to what the market dynamics are in your neighborhood, then contact us today for a private consultation and no obligation home evaluation. For buyers, there are deals available. There are not more homes being listed. However, you have more leverage now than you've had in years and years. And by that, if you go and look at the months of supply, yes, it's higher. The rates are higher, but months of supply are also higher. That means you have more leverage. If you are waiting for interest rates to come down, you are waiting for it to be a stronger seller's market. Now it is actually a balanced market at best. In many neighborhoods, it is a very strong buyer's neighborhood. So it is a great time to be a buyer. You'll buy with a higher interest rate, but you can refinance at no upfront cost for 3 years with one of our preferred lenders. So if that interests you or someone you know, then please contact us for a free, again, no obligation consultation. So that is your Washington, D.C. area real estate market report for July of 2025. If you or someone you know has any real estate needs in the Washington, D.C. area, please reach out. We would love to be a resource for them. Thanks for watching, and let us know if you have any questions. Take care.